Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the TheoTrade nightly video for May the 9th, 2019, as we continue to see the stock market drop from its all-time highs. In the S&P, that's about 2955. We are, as of this recording, down about 100 points from the peak. That is in line with what we were thinking in terms of a market overextended, overbought, barely making that new high, and any type of similarity we've been discussing with this August into September period. So picking up where we left off, just taking a look at where the market is, bigger picture concepts before we start talking about individual stock names and any type of management or entry opportunities on them. Just take a look at the S&P 500 into the 2850 pivot or spot marker, which we thought was going to be at least a minimum downside target, similar to what we saw into October. What happens next is going to be key as we continue through May 2019. Remember that sell in May, go away concept? At least at the moment, that has been a successful play. But whether the market bounces or rallies off of this spot, that's what we will be watching. So look for any type of bounce up away from this 2860 target, just into this moving average and anything else that occurs from there. We do think the market has drop zone potential beneath about 2850 and 2800 especially. That could drop it down to about 2750 or even 2700 or maybe even beneath that. But we're not there yet. Now let's take a look at individual stock names, big stock names falling from the highs, and we'll start with a big one that declined about 5% today, and that is Intel. Intel peaked. Again, we're going to compare the September or later 2018 period to what we are seeing now. Intel was a strong stock getting stronger. All seemed well with this stock until earnings and volatility and other factors sent this stock in a tumble. So Intel shares have collapsed at the moment from $60 per share down to the current 46, which is beneath about the 48 downside target that was achieved well in advance of what we expected. High volume and high volatility signals additional opportunities for intraday traders especially, or short-term swing traders, but also risk for all of us. Anybody selling premium under here was surprised to wake up with a massive downside gap through those distant premiums and distant probabilities. I think a lot of us thought could not be hit, yet they were and were exceeded. These probability of expiring graphs are guidelines to us, but they certainly are just that, mathematical probabilities. They don't guarantee the market will stay within these zones into the future. And Intel is a good example of that. But implied volatility is relatively stabilizing after maybe what should have been a higher spike, and that is into key pivot points. At this trend line, it goes back even further than this chart at about the 48 per share level. So watch what happens between these zones, 46 per share and about 48 per share for Intel. If the S&P does bounce, probably Intel will bounce with it. But if Intel starts to crumble beneath 46, 45 and lower, we may see it not just to 42 per share, but even lower than that. We know that high volatility strategies or high VIX or high implied volatility environments do tend to favor net premium sell strategies. So selling premium as opposed to buying or purchase premium strategies. Those do well or better in low volatility, low implied volatility, and low range events. That's because increases in volatility will increase the vega and increase the price of your options, whether it is a put or a call. We do prefer it to be a put because those puts do get more valuable as implied volatility increases. Next up is, of course, Boeing. Boeing was a stock that took the Dow lower today, but recovered to almost break even, still down 1%. This candle, or this little play, showed that the stock was down about $10 at one point in today's trading session. That is because it hit a target, roughly the 350 per share level. That's a midpoint of a wider trading range, and Boeing does trade into that spot at the moment. So going forward, with any open positions or managed positions, watch your 365 upper resistance, currently 350 midpoint support, And eventually, if it comes into play, 340, just under 340 for our lower range-bound support target. Next up, we'll take a look at M, because it's pushed well away from the highs. This is similar to Intel, at least in terms of price, pattern, expectations, and surprises. Again, we do like to reference our probability of expiring cone. Keep in mind that that was up here, and that means this stock that has trended down and lower and liquidated on high volume after the earnings expectation or earnings announcement, well, that's going to take a lot of traders' profits with them or turn those losing trades into winning trades unexpectedly. So a lot of volatility has entered this stock, and of course, traders are upended by this directional movement. You don't see stocks this big move this quickly unless something big is afoot. Nevertheless, M has achieved a new 52-week low, taking it well beneath where it was for the bulk of 2018. On high volume, the highest volume we've seen in quite some time. So this is a bear candidate. We prefer to get into bear candidates or short sell positions on pullbacks. We don't want to walk up and short sell this or start rapidly buying puts after this much of a decline. If anything, you might want to play against it with calls or aggressive bull bounce strategies. Those are very risky, and you might want to take those on an intraday basis. But nonetheless, this is an overdone, overcooked, collapsed stock that is into 175 per share. We'll take a look at CSCO and see that it's not quite as dramatic. It's a popular stock, a really large market cap stock that is pulled away from the 58 per share level and has taken it down to about 52. This is a standard pullback that went further than expected. This does happen, and in this particular stock, it did maintain its uptrend until, this is always something to watch when you're in any position. If you're playing long into an environment, you want to see volume go with price, which means you want to see higher prices and green or bull volume expand or trade higher. That occurred for the bulk of 2019 until about April, and especially recently in May. So just for reference purposes, this particular pattern of price going up, volume going down or diverging, that's something we would not want to be really bullish into. And if you are a fade or reversal style trader, that's going to be your hallmark to get short positions on, purchase puts beneath the 56 level, and then play into a low volatility environment that did pick up. Interestingly enough, before the market peaked, I think this is another clue and example for the future reference, that implied volatility steadily increased as price went higher. So volume drying up, implied volatility creeping up, that's a sign of a likely reversal. And Google, that's another surprise one, almost there with Intel, which is a strong stock getting stronger, peaking just a little bit above the prior high, which is about 1,300 per share, and then earnings sends it tumbling. So Google has fallen from the 1,300 per share level down to almost 1,150, which will be a price pivot or inflection zone. So watch it closely at 150. Just like the S&P or the Nasdaq or broader indexes, a failure to bounce immediately does open this stock to fall toward 1,100. And we'll look at Home Depot and then turn you loose to trade this evening. So Home Depot does have its similar pullback. It's similar, right? We're seeing the same sort of pattern here. With the price going higher, we can zoom this in. Higher highs, higher lows, higher highs, but bull volume continued to decline. This is a good example, again, for future reference or any type of other strategies that you might use for reversal or to be cautious on buying the next pullback. When volume declines as price rises, implied volatility stayed relatively low, so that again favored put purchase plans, as the stock did tumble from its roughly 210 per share to where it is now, just above 190. And that is into a reference. We can show you how we look at this, just simply prior highs. That's about just above 190 per share. So like anything, watch the S&P, watch the Nasdaq into their downside support targets. Intel, Home Depot, Google, the like. If we see a bounce in the markets, we'll see a bounce in most of these stocks. But if we don't, you can look for downside targets on all these names, which includes, at least for Home Depot, to about the 180 per share level. As always, be careful and be safe. This is Corey Rosenblum with your Theo Nightly video for May the 9th, 2019.